All right, everyone, we are getting ready to get started here. We are here, the team from eAssist. We've got Taylor Anderson, he's our general counsel. We've got Warren Willis, he is a practicing dentist. Dr. Anderson, our CEO, and also a practicing dentist. And Dr. Brian Borg, practicing dentist. And so what we have here is a panel of experts who are not just accountants, and although one is an attorney, the majority of this panel are actually doctors just like you, going through this process, and they want to share with you what they've learned, what they've discovered, how they've become experts, and everything that has happened in the last few weeks throughout our industry. So we are going to go ahead and get started here with an update for you on what has changed about the SBA loans and what has happened with the CARES Act in the last 10 days since the last webinar we had on this topic with you guys. Take it away, Dr. Anderson.
Thanks, Sarah. I really appreciate it. Thanks for joining, everyone. We won't waste your time today. We actually, we've learned a lot. Some things have changed since we spoke just 10 days ago. And even just 3 days ago, some more stuff has changed. I mean, it's all coming down the pike real fast. What we hope you learn today is the changes to how the CARES Act is being interpreted by the SBA and the guidance they're giving lenders. And we'll talk about some interesting things. If you got in those first 3 or 4 days, you were able to count some contractors and things. We'll talk about that. What it's like to apply for the loan. We've tried. I have 3 loans pending right now. And I just got a text message, Warren, saying from one of the guys up in Idaho, it's been approved.
All right.
So we'll talk more about that and how we can do it for all the companies that I have in the dental office. And then we hope that by the time you're finished, you'll have a thorough action plan, very thoughtful plan of how you go forward this week to continue to apply for these things and get your dental office ready to go. So when it's ready to open up, you are going. Let me just briefly explain who we are. I'm the CEO of eAssist, practicing dentist, like what Sarah said, the co-chair of the Roseman Dental School MBA Advisory Board, also an associate professor in their dental MBA program, a very unique program, great people there. Also HBS, Harvard Business School alumni. I have a BS in finance from BYU and my doctorate, my DMD from OHSU in Oregon, where I met Warren as a classmate. Taylor.
Yeah.
My name's Taylor Anderson. I'm a business attorney. It's great to be on the panel again today. I have about 17 years experience. Including co-founding my own firm here in the Salt Lake City, Utah area a number of years ago. Graduated from Willamette University with both a law degree and an MBA, and joined eAssist full-time about a year ago.
And you were the editor-in-chief of the Law Review, if I remember right. Is that right?
I was.
It's a big deal. Okay, Brian.
Oh, he's on mute.
He's muted.
There you are, Brian.
Glad to be with you, everybody, today. I'm Brian Borg. I'm a practicing dentist, have been for 14 years. We've started 3 dental offices, and mostly just like the rest of you out there watching, just trying to navigate through these loans. So,
Brian, you're actually broadcasting from you're at your dental office. You're in between patients.
I'm in my scrubs. I'm actually on my lunch break. I'm actually been seeing emergencies all morning and all afternoon. So.
We love it. We're going to talk about how important it is to keep your practice open with emergencies if your state allows it later. Warren.
Yes, glad to be with you again. My name's Warren Willis. I've been practicing for 18 years, started a number of dental practices, and like James said, we were both at OHSU together, classmates, and it's been great being here today with you.
So who do we represent? eAssist Dental Solutions, America's #1 dental billing service provider, 800 plus team members strong, doing billing for dental offices all over the country. And we serve thousands of dentists nationwide. We won a handful of awards, and there's a few listed there. Our core purpose is to deliver peace of mind. That's why we're doing what we're doing here now, is to help us as dentists right now understand what we should be doing so that we can have peace of mind knowing our practices are going to be okay. That when this virus gets over, and we will get past it, it'll end. And when it ends, we'll turn things around. Dentistry is a wonderful career, a wonderful profession. It's essentially recession-proof. We're dentists helping dentists. Taylor, would you mind explaining what this all means here?
Yeah, sure. As James said, that's our approach. Of course, we're not giving tax or legal advice. These laws are complicated. Many of them change, including daily, including the regulations to enforce them, or implement them. We're going to be talking about some of those changes here. Of course, you should connect with your own professional advisors to get the advice you need for your particular situation. But that said, we're very excited to share with you what we've been learning and doing over the past couple of weeks. I want to start with just a very general, and won't spend a lot of time here. Again, a reminder about how the CARES Act can help dentists fund operations. As we all know from the past couple of weeks, it creates a new kind of loan, the PPP loan, Paycheck Protection Program loan. We're going to provide some updates there. We'll also provide some updates to two other types of SBA loans that were modified through the CARES Act that could be helpful to dental practices. There's also federal student loan and current SBA loan relief. You can also request forbearance if you have a federally backed mortgage, and even the payroll tax, through the end of the year, 5,000 quarterly maximum per employee. Those are some examples of some potential benefits to your dental practice.
So we talked about this 10 days ago, maybe it was last week, 7 days ago, that three main types of SBA loans were modified in the CARES Act: the EIDL loan, the SBA Express loan, and the SBA PPP loan. We're going to talk about updates since our last webinar, how things have been reinterpreted, and the guidance that banks have given on each of these various loans. Let's first talk about the EIDL loan. Warren, why don't you take this slide?
Sure. I'd be happy to take it. Basically, one of the things that we were told a week ago or more was that you could apply for these loans. It would take some time to get the actual SBA representative to call you and discuss your EIDL loan application, but that you could get this $10,000 advance grant that would happen within 72 hours. And that just isn't true. We haven't heard of anybody receiving those funds yet, the $10,000 advance. You can still apply. When we did contact the SBA, they said they're still receiving applications, and they want to get an idea of the amount of applications they're receiving. My gut impression, that's more than they can handle reviewing individually. There's so many small businesses in America, millions of them, but we'll see how they decide on that. And then the other thing is that we should anticipate that there's some limitation and rules on the $10,000. The branch in Boston, Massachusetts, actually listed on their webpage, and they've since taken it down, that this was going to be limited by the number of employees to determine how much of the $10,000 you would get. In other words, if you had one employee, you would get $1,000. If you had 10 or more employees, you would get the $10,000 maximum amount. And I think the government's just trying to determine the amount of money that might need to be applied to that. The actual loan amounts, when you do request the actual EIDL loan itself, may be much less than the $2 million maximum. You would determine that with your SBA representative on how much working capital you might be requesting and for what period of time.
Warren, let me just say a few things here. So when we gave this webinar on Friday, because without lack of guidance, we even told people, look, we think the window to apply for the EIDL loan is probably closed.
Yeah.
And you shouldn't apply for it, because the form that you fill out even says, when you fill out the PPP loan application, it says, do you want to roll in your $10,000 advance into your PPP form? And I selected no, because I hadn't got it. Like, why would you still be asked? No one's got it. We don't have the EIDL form. No one got the 10,000 I'm aware of. And we're going to be doing a little poll here in a minute to see if any of you have it. So, with your peers, we've got almost 800 or so dentists on today. So we'll find out about that. But you still can. They're saying we haven't given out any of them, from what we understand. We're waiting to see how many we have, and then we'll start to give them out as soon as we, these things kind of stop coming in. Anything you want to add to that, Taylor?
No, I think that's right. Again, it's an example of while the government's trying to move fast, it's hard for the federal government to move fast, and a lot of changes and things happening. So,
yeah, that's a good news. So we'll
That's
do
interesting, James. Down on chat, I'm seeing actually some people that are chiming in saying that they have actually received that. So it'll be interesting to see with our poll that we take how many have actually received that. But I am seeing some people that are saying that they have received that 10,000 or 5,000 for they had 5 employees.
That's great.
So it'll be interesting.
Yeah, I never did. I got an email saying it was processing or pending, but that was it as far as it went. All right, so just a brief overview of the EIDL loan here for those of you that don't know what it is. It's a loan up to 30 years, 3.75 interest. The max amounts to no personal guarantee if it's under 200,000. After that, you may even have to have collateral if it exceeds more than 25. And then there's the $10,000 grant we're talking about here. And the forgiveness with the EIDL loan is only with the first 10,000 with the new CARES Act if it's used to maintain payroll, and you're supposed to roll that in. All right, let's talk about the 7A Express loan. All right, Warren, would you mind taking this again? What are the changes made to the 7A Express?
Sure. So if you go to SBA.gov, you're going to see that the SBA Express Loan website has changed. And particularly, they're now referring it to this SBA 7A Express Bridge Loan, referring to that it's a way to get money into your hands faster while you're waiting for your EIDL loan application to finally be processed and fund a larger amount, perhaps. So, and they say to do this loan, you must have a pre-existing relationship with your SBA lender. The maximum amount that they will give is $25,000. The interest rate is prime plus 6.5%, so a lot worse than the PPP loan interest rate. And the turnaround time is fast. It's 36 hours. And once again, once you are approved for the EIDL loan itself, then they want this express loan paid back to the lender by your proceeds from the EIDL loan that you end up taking.
So it's different than they bumped this limit up from 350,000 to $1 million in the CARES Act. It's actually in the bill. It's in the act, and now they're using another offshoot of SBA Express and making it up to 2,500 to help during. They're just modifying stuff. How do lawyers do this, Taylor? The bill says something else, they change it whenever they want.
Well, to be clear, this is kind of a subset. My understanding is this is like an express bridge loan. The 7A Express that we talked about last time still exists, and that still is bumped up to $1 million, potential loan size. This, I think, comes under a different law for disasters in general, and now they're turning this on to try to help people temporarily.
Okay, great. I'll review this briefly. This is the 7A Express loan. What the bill says, it can be used for real estate, for acquiring a business, up to $1 million. You can see that there. Turnaround time is 36 hours. The interest rate negotiable, but may not exceed the SBA maximum, so that's changed a little bit. Term up to 7 years with maturity extensions permitted. You can see there is some deferment there, but it probably will change. Right now, that's what we have, and who knows, but I haven't applied for this loan yet, but I'm planning on doing it. This is our last one. I asked my banker about it, and they said, well, we're so focused on the PPP right now, or one of my bankers, we're so focused on the PPP right now that we're not even touching this express loan. But after we get done with the PPP, come back to us because you've had your accounts here, and we're happy to look at what that is. He probably didn't know what I was talking about, frankly. I didn't know. Right? All right. So I can't wait for Brian to share his story about all the different people he's looked at and talked to about the PPP. But did you want to say something, Warren?
No, I was just agreeing with you that I don't think they're quite sure what the loan is itself that they can even offer at this point.
Yeah, I even got a few letters or emails from folks who are saying, hey, my CPA doesn't understand this. And I had him watch your video to see it's just a matter of learning stuff, reading stuff, and we're giving you the most up-to-date information that we have right now. So let's talk about the PPP update. This is where we are here. This is probably the most relevant thing for all of us as dental office owners. Warren, go ahead. Would you mind going through this one?
Sure. So one of the updates that we learned that was really important to a lot of us as owners is that you cannot include an independent contractor or a sole proprietor in calculating your maximum payroll costs. And that was clearly defined on the 7th. So on April 2nd, the final interim ruling that they sent out was kind of contradictory. And there were a lot of lenders that, in fact, we've talked to some that said, if you would have came to us Friday, that's exactly how we understood it, that you could apply for the amounts that you paid independent contractors in your maximum loan amount, but that it couldn't be forgiven. They couldn't count as employees and it couldn't be forgiven. And so on April 7th, they sent a new question and answer form to lenders on the 7th. And that clarified that you actually could not include the independent contractors or sole proprietors. But at the same time, they said, if you had done it before this clarification was put out, you don't have to change the applications or go back and do anything. We'll still honor it the way that you approved it.
How
So
about
that
that?
was big.
So we had a
Yeah.
5-day window where all your contractors would have been included in the payroll costs.
Yeah.
Because the bill made it clear that you could, and then it was reinterpreted. And there they wanted all the contractors to go and apply themselves. But so we were both right. There were a group of people who were saying, including Adam Schiff and the ADA, from what I understand, if I remember right, hey, you can include the independent contractors. We recommended that too, based on what we were reading. And there were a group of lenders that said, yes, you could. My bank, Zion's Bank, said, yes, you could, all the way until Wednesday. They didn't have their application online yet. And they had this complicated application process they were doing because they're a bigger bank and a good bank, but a bigger bank. And so we'll talk more about how the bigger banks are changing stuff and making it harder. And that's exactly what happened. But the smaller banks, the small credit unions, if you could have got it in by Friday, by the 7th or the 6th, then you probably were able to get some extra money in your PPP
Yeah.
by including your contractors. You know what? Okay, keep going, Warren.
Okay, so we also found that, basically there's a little bit of variance from lender to lender on what they use for whether they use all of 2019. Some said, bring your W-3 from 2019. That's what we're going to calculate it on. That's mainly more of the bigger banks. And then some said, yeah, it's fine. We'll go ahead and just use your first quarter of 2020. If you have more employees or that's your higher payroll costs, we can just use the first quarter of 2020. And so that's what I actually ended up doing with my lender, is we used the first quarter of this year. They also bumped the interest rate from the 0.5% to 1% interest rate. That was done the day before they even started the loans themselves. And the other thing that they changed is, as soon as they started approving all these loans, a lot of people, kind of like us as dentists, were like, oh, I'm not ready. I can't open my doors yet. Maybe they're a non-essential business. I want to wait to take these funds and start my loan origination date later, because so many people were requesting to postpone receiving the funds. The SBA came up and said, as soon as the application's approved, you must take the proceeds within 10 days of approval. So unfortunately, that means your 8-week forgiveness period will start at that point. And we can talk more about some strategy or some thoughts on that later. But and then there again, we don't have the full disclosure of the forgiveness details yet. I think that's going to be something they're still working on, what you need to provide and how the forgiveness exactly works.
Thanks, Warren. I think, this is guidance that's happening in real time. Like when we were there on Tuesday, our banker said, no. Once you get approved, we can hold on to it for as long as you want.
Yeah.
Right? Remember?
That is what they said. Yeah.
As you want. And as soon as you're ready to go, then you sign the forms and you're ready to go, because the money's coming from us, not the SBA. They're giving it to us, and then we're giving you our loan from our bank. They're backing it. So it's just, but we still believe strongly that because these funds are limited, and we will talk about this, that you still go get it. Even though others are saying, hey, wait till May, wait till June. If there isn't any money left and you wait that long when you open, then you got a real problem. So we'll talk more about that in a few minutes. Brian, anything you want to add to the slide deck?
Oh, no, we're good.
Okay. All right. So just a brief overview again for those of you that haven't done this. The 7A PPP includes all of these things. No longer are independent contractors now a part of your wage calculation, but there was a 5-day window where they could have been. You can see the details here. The loan amount will be 2.5 times. Interest rates now, turnaround time is supposed to be 2 weeks, deferment 6 months. There is forgiveness. So let's talk about how the forgiveness works and how maybe this has changed a little bit too. Warren, would you mind taking it?
Sure. So basically, they're going to look at what you pay for in this 8-week forgiveness period. And payroll needs to account for 75% of that. So other things that are eligible expenses besides payroll can make up to 25%, but payroll must be 75% of what you're asking for to be forgiven. And that payroll, of course, includes sick pay, medical or family leave, and if you had employees that were making over $100,000, that's limited to $100,000 a year is limited to a benefit of $8,333 per month. And the other part is that they will calculate, of course, how many full-time employees you have at that point during this 8-week period. If you need to have the same number of full-time employees by June 30th that you had last year during the same period of time, basically February 15th to June 30th of 2019. Otherwise, they'll deduct the amount of forgiveness. And another way is they'll look at how much you paid your employees. If you paid them less than 25% of what they were previously making, they will reduce that by that equal dollar amount as well. I think that's basically it as far as what we know about loan forgiveness at this point.
And again, important to remind everyone, based on, again, recent guidance that we covered a couple slides ago, as of, I think, April 8th, the SBA again clarified that 8-week period starts upon the first disbursement of loan proceeds. And then they also said lenders have to make that first disbursement within 10 days of loan approval.
So one
That's
strategy
great.
would be, if you do get the loan and you are approved, and I was just approved today, I'm going to tell them wait 10 days before we get it. And that's the
Right.
biggest stretch I have. And you might have a window there where you have to fill out a DocuSign that comes from the SBA from your bank. I'm not sure
Right.
exactly and how that works, who's sending out the DocuSign, if it's the SBA or your bank. I haven't opened up the email yet. Maybe Brian, you can talk on that, but in a minute. But it doesn't matter. I mean, there might even be a window there where you could like postpone that a little bit, like not signing your SBA thing to get by some more time. We'll talk more about strategies. Brian, do you want to go over this? Would you mind going over this, calculating your PPA 75
sure.
ratio?
You bet. So this is a little bit of a pseudo office. We've been talking a lot about numbers and CPA stuff and lawyer stuff. This kind of puts it into light for a dental office. You can see the idea here is you can only use 75%, like Warren said, towards or 25% for other stuff other than your payroll. So when you fill out your application, it will ask for your 2.5 times payroll. It'll ask you what your monthly average is. I've done a couple applications, so there are some that are different, but that's on each one that I filled out, they ask for that. But in this case, this is a little bit of a pseudo office. This kind of gives you an idea of what you can expect to use or the money that you can have and what you'll be able to use it for. So in this example, we have payroll for W-2 employees. There's assistants, front desk, hygienists, and office managers. We just did an arbitrary number, and it was at $31,000, $31,500. Then we put in our W-2 associate doctor. Now, everybody pays their doctors a little bit different, but if you have a W-2 associate doctor, he can take up to $100,000, and that's why you see the 8,333. That's the monthly amount of the $100,000. And then, of course, we included ourselves to show that you can take that same amount. If you were paid as a W-2, there's different ways that you pay yourself, but you can only take up to your $100,000 per year. So the total payroll on this pseudo office we did at $48,000. So we times that by 2.5, it gives $120,000. That's what we can take out and as a loan. Now the idea and what we're trying to show you is that the 75% of that on the back end has to be used for payroll. So of that, we're left with 25% that we can go back and pay for other things. So in this pseudo office, we were left with $30,000 to go back and pay for rent, to go back and pay for mortgage interest, and for utilities. And so hopefully that helps you see a little bit. Maybe you can put your own numbers in there. And we actually have a little calculator here that you can use on our website, but I'll let James show you that.
You do.
Hey, Brian, I was just going to mention one thing. If you do pay your employee as or your associate as a 1099 instead, then they need to apply for it themselves. They need to apply for the PPP loan themselves as an independent contractor.
I want to say that. I want to say that too. It's really important. And Warren and I both have our dental offices set up the same way. And Brian, I think yours is set up the same way, where we don't pay ourselves as we have a small W-2 part. We do. We also manage multiple dental practices. So we also have another entity that pays a management fee and does some things and has some pay that goes to us as doctors. And I've had that company. That company is essentially an independent contractor company with one employee. That's me. It owns some real estate, has some other stuff. And I just found out today that company also was approved for the maximum amount. Warren, I think yours was too, right?
I was, yeah, I was given the maximum amount, which is basically $21,000.
Yeah. So we had some people asked us, hey, well, I take myself out as a draw. Can I get, you can, if you're just pulling it out as a draw, as a dividend, you can't include that. You cannot. It either has to be a W-2 or you have to have an independent contractor company that is billing your company. And you just can't set it up right now and hope that you can turn it on, because you got to show records in the past. In order for my independent contractor company to get approved, they didn't need a copy of my W-3s. They needed my tax return from last year. And they used how much money I made divided by 12 as the maximum amount of what the loan could be for. And if I did some Uber driving too, that would be bundled in there too, I guess, right? Right. So, but
one thing I would
Anyway.
add to that, James, one thing on that is, if you haven't been paying yourself as a W-2 and you've just been taking draws, well, you can kind of change that in the future. You won't be able to use that on that 75% portion. But if you start paying yourself, you can most likely, the way that I read it, is that you'd be able to at least capitalize on some pay in that 25%. Now, maybe people are going to use up that 25% and everything else, so it wouldn't be advantageous to them. But you can still change that going forward and try to capitalize on that.
Great insight, Brian. I appreciate that. So if you haven't yet applied for the loan, go to dentalbillion.com/estimator. And you can use our calculator. You can put everybody in, and you know exactly how to fill it out. And it'll tell you exactly how much you should use for payroll expense and how much you can use for utilities, mortgage interest, and what am I missing? Utilities,
Interest on a mortgage,
rent, lease.
Yeah.
Okay, so what should you do now? Well, if you haven't yet applied for the PPP, I know others are saying wait, you want to wait. But just yesterday or 2 days ago, it was shot down. The two parties couldn't agree on the new package. And I know with how hard it is for our government sometimes by design, to solve problems and work very efficiently. The terms may change. It might not still be there. I know President Trump tweeted out that it would happen. It would be there. An extra $250 billion would be there for small businesses. I think as of 2 days ago, I saw that it was $191 billion that had already been given out through the PPP. And I'm not sure what it is now. Warren or Brian, Taylor, have you guys had any update on that?
Yeah, it's really close to about 200 billion. I think a similar amount I read too has been requested through the EIDL loans as well. So there's a large amount of people. There's 75 million or something small business owners in America. They're all requesting money. I think the EIDL loan itself, they don't have partitioned that much money into it, so they're limiting maybe what those how much those applications, at least right now, can be for. But the government is supposedly trying to fund both the EIDL more money, both the PPP loan more money, but that has to go through Congress. You know, that's just a hope and a prayer right now. And it's a little bit dangerous to bet on that.
Yeah, what's the saying? I've seen it on the Geico commercials. Something about a bird in the hand or something. What is that?
Yeah, a bird in the hand is better than two in the bush. So
yeah, that applies right here. A bird in the hand is better than two in the bush. Who knows if it's still going to be there? You can take that
right.
risk, but there's some strategies about instead of if we get the money and I get it in 10 days, and I have some of my guys are they're all furloughed, but we're open now, doing emergency care and urgent care, which we can do in the state of Utah. We're going to talk about how important it is to do that. And if you fired all your staff, bring them back and let's do emergencies. Like that's how you survive through this. And by doing that, you can do some creative things when it comes to bonuses to your staff, and to pay them a bunch of money before it expires. I think they're looking at it month to month. Taylor, is that right? In terms of forgiveness, but it's up in the air. They might modify it if the ADA can convince them. Look, dentists have been closed. Like, give us some leeway on the forgiveness. It may come down the pike. We don't know.
We definitely expect, the SBA said they will absolutely be providing more detail about forgiveness details and process.
Yeah. So we're saying apply for the PPP, go get it now. And we'll tell you which kind of banks to use here in a moment. We've had bad experiences and good ones. We'll tell you that. We have some photographs too of a small little tiny bank in Idaho that an example of the kind of place where you want to go. But if you haven't applied for the EIDL loan, go apply for it. You still can if you use it for a different purpose. And that can be working capital over 6 months, and your PPP is payroll right now over the next 8 weeks. So they will be different purposes, but we're recommending you talk to your lender about that. Make sure you understand it. Anything else you want to add to that, Taylor?
No.
Double dipping? All right. Okay.
Yep.
So let's do our first poll. Sarah, take it away.
All right, we are going to launch a poll right now. And the first poll we want to ask is, which SBA loans have you applied for? So you'll see that pop up on your screen right now. You guys should see that question. And you can choose more than one. So we did list 4 options there. All 3 of the loans we've covered in the from the SBA, and also the option of I haven't applied for any. So we have currently, looks like we've got over 500 votes who have come in so far. And we do have 2 clear winners right now, and womp womp, one kind of loser. All right, we're gonna let this poll go for about, let's do like 10 more seconds. If you haven't voted, go ahead and jump on there. And then we're gonna close it out and we'll share the results with you guys so you can see who the winners are and who the losers are. All right. Oh, I like the Jeopardy song there.
I don't know if we can. Are we licensed for that?
We have that license? I'm not sure.
Our attorney's on the call. How come he missed that? Come on, Taylor.
All right, close it down. Shut it down. Shut it all down.
Shut it down. Shut it down.
All right, guys, here are the results. You should see this on your screen now.
All right.
Great.
Well, so most people have applied for the EIDL loan and the 10K advance and the PPP.
Yeah.
Not everyone's applied for the PPP. There are still a number of you that haven't. And so I hope this webinar will be helpful for those that haven't. And for those that have, well, you have some more insight on what's changed and what to look for. We're also going to talk some more about how to get your practices up and going here before we're finished and make sure they stay healthy. All right, let's go to the next one.
All right. Now we're going to launch a second poll to you guys, which you will see up on your screen. And this is us asking whether or not you've received any funds from the SBA. Again, this is a multiple choice answer. So you guys can select all of them that may apply to you. Oh, here we go. And you should see that live on your screen right now. So we've got an option for, yes, you have received funds from the SBA regarding your EIDL and 10K advance, the 7A PPP, the 7A Express, and none of my funds have come in.
Wow, look at this. Look at this, guys. This is so, I can't wait to share these results with you. This is very, very helpful. It looks like there's some people, there's a small group of people that are in the know that are very sophisticated PPP loan borrowers. A super small 2% right now that have got something. Wow. Yeah, we don't have anything.
All right, we're going to close down the poll here and share these results with you guys. We got about 686 people who voted, and you can see 97% have not received any funds from the SBA for any loans they've applied for.
So, and some received the 10,000K grant, but super small. Most of us haven't received anything. I imagine a week from now, 2 weeks from now, this would flip. But I feel better. I haven't got anything either. So I'm not out of luck yet.
At least now you know it wasn't personal, Dr. Anderson.
It wasn't. I didn't think it was.
You know, and part of this, I think, is we've heard from a number of lenders that the system, the portals that they created for these lenders to get applications in have just been crashing, overwhelmed, crashing, and it's been really hard to process these. So it's understandable that a lot of people haven't received their money yet.
Yeah. Well, great. Let's move on. Okay. Let's. Brian, you want to take us away here?
I guess we just got some question and answers, right? So at this time, I think we got Sarah. Have you been collecting some questions for us?
Absolutely. We've got tons of questions that have been coming in. We have 131 right now in our Q&A. So I'm going to read a couple off and you guys just jump on in. Let's see how many people we can help. And we will have more Q&A at later points in the webinar. So if we don't get to your question right now, we will make sure to come back to it later. So here's, we will do our best. And if we don't get to it, we'll try to shoot you an email, whatever we can do to help. We're here. A lot of the questions you guys may be asking too, we have answers on our website for a lot of these. You can go to dentalbilling.com and find the answers to a lot of questions as well. All right, so we have a question from Ryan Thomas. He's asking, can LLC owners use their income in addition to W-2 employees' income in determining their payroll costs? I'm assuming that's for the PPP loan.
Okay. So if I maybe need to clarify it just a little bit, is he talking about whether he's paying himself from the practice an LLC, or is the practice itself an LLC? So I'll answer both in both directions, I guess. If you have employees, obviously the W-2, you're going to be able to count those. And if you yourself are receiving any type of W-2 wages in your practice itself, then you'll be able to count those as well. Anything that determines that you are part of the payroll cost of the practice. But if you're paying yourself as an independent contractor, then the entity, which like in my case, that's my case, my LLC that was separate from the dental practice had to apply for the PPP loan by itself.
This is what's so, I don't want to move away from this one because this is such a, there's a couple strategies here too, and it's such a moving target. Let me explain what my thinking here. Not only are the fact that Uber drivers, independent contractors, can apply for this PPP Paycheck Protection Program doesn't make a lot of sense. Like, I scratch my head. Why don't you just let the businesses that that hire the 1099 employees, why don't you just let them apply for this loan? And maybe it's because Uber is so big, it has more than 500 employees, it doesn't count. And so they couldn't apply because they're a big company, and all the small Uber drivers, I'm just conjecture here, all the small Uber drivers would have been left out. So instead, they have to manually apply themselves for all of it. And so because of that, they don't have any employees. So they can't do a list of all their W-3s and all the people they gave W-2s to and calculate their payroll costs based on employees. Instead, it's what their wages were for the last year coming in on average. So it's a little different model. If you just have a company of one with 0 employees and it's just you, maybe 1 employee, then you calculate it differently. And it really comes down to your lender, the way they interpret the guidance, right? Like,
absolutely.
I would try to put it in there. I tried. The first time I applied, I tried to put everything I possibly could in there, and it was kicked back by the lender, who said, no, you can't include that. And then I even one of my guys, I applied for one of our companies. And the guy said, no, we're not going to take your W-2s for last quarter. Like what Warren said, his lender was able to do. We want your payroll costs for the whole year. We can take the last 4 quarters, including quarter 1 of this year, but we have to include all of it. And that's the way they were interpreting the guidance. But Warren's lender was saying, no, we'll just take your last one. If that's the very best one, then we'll just average that one out, times that one by 2.5.
Right. In fact, they even used just only January and February's payroll costs because March wasn't finished. So they said, we'll just use February and January's payroll. So they're a small lender, and they were very flexible. Going to a big bank, that wouldn't have happened.
No way. The big bank ask for all these unique forms. They make their own online portals, and they're asking for things that are not included in the SBA loan application. And we'll get to that in a minute, like how we recommend you go about applying if you haven't applied yet. But if I were you, I would try to put the LLC down and go to a small lender and put it down. If the lender says, no, you can't, then you take it out. And if you have, like what Warren said, if you had another company that was an LLC and you were paying that company that way, well, you can for sure apply for that one as an independent contractor and get paid for both. And again, that's how I did it too with one of my entities as well. Yeah. Anything you want to add to that, Taylor or Brian?
You know, I'll say it's understandable. This is an area where, despite the SBA's attempt to clarify, which in and of itself indicates that there was confusion on this point or could be confusion, they've created potentially some more confusion. And so at the end of the day, what they've done is say, look, companies with employees, you can apply at one point, for the loan, and we're including employees in those payroll costs. Independent contractors, sole proprietors, you can apply at a different time. Now they're both open, or should be, and you can include your self-employment income, for example, as a contractor. So they're not trying to cut them out, but they've kind of bifurcated something that many of us didn't read that way in the CARES Act, or that wasn't drafted that way. But to Warren's point and yours, James, is at this point, the lenders are the practical gatekeepers of this issue. And so be aware of the issue, ask your questions to them. And if you don't like it, there's nothing that says you can't get a second or third opinion.
Right.
I did.
maybe I'll
I kept looking.
maybe I'll say one thing about that, because I did get the insider scoop on the bank's perspective, is that they could loan you $1 million if they wanted to, but if you default on that loan, that's the point where the SBA comes in and says, okay, we understand there's a default on this loan. Let's see if you followed the guidelines. If you did, then we are backing it. If you didn't, now you're responsible to that lender, and it's not guaranteed by us. So that's important to remember why the bank, if you're going to a small credit union, they've known you for a long time, they're like, man, they have a great business, they're gonna have no problem paying this back. My lender was like, we don't mind if you round up a little bit and ask for a little bit extra, it's totally fine. So it just depends on what that relationship's like.
So
Yeah.
there you go.
Great. Well, we have a slew of questions coming in about how you use the PPP loan funds, especially as dentists where many offices are closed down and their teams are getting paid fairly well on unemployment. So kind of several questions coming in that conglomerate there. But what we're seeing asked here is, can I use my PPP loans to pay taxes or for other purposes? If so, what happens if it doesn't get, lumped into that forgiveness? And using the PPP fund and that loan not for payroll.
I'll start there. So if you do things that aren't part of the forgiveness sections, and again, it's going to be modified some more, and we'll have more guidance. They've told us they'll give us more guidance, and I'll let you add some more to that, Taylor. It's fine. It's a loan, a 1% loan, with a 2-year term. So if you need to use it to pay your taxes, it's almost free money. With interest, inflation higher than 1%, it's going to be a lot higher with what's happening here. Then if you have to do it, to use it for whatever, even if it's not forgiven, you have to pay it back, but it's 1% interest rate.
Now, I will say, James, that taxes are not on the list under the CARES Act of what you can use the proceeds for. I agree with you. There's also an additional forgiveness analysis. But the CARES Act says payroll costs, employee salaries, payments of interest on mortgage obligations, rent, utilities, interest on any other debt obligations that were incurred before the covered period. And again, I think the relevant look back here is these kind of obligations needed to be in place, maybe not the employee ones, but some of these other ones. I think February 15th, isn't that the date, Warren?
That is the date, yeah. If you had a debt on a piece of equipment in your practice and you've been making the interest on that debt can be forgiven, not the principal, but the interest.
And the other
And
one
so
is also cost. Yeah, sorry, Warren. The other one is cost related to group healthcare benefits, but that's the list. Again,
so if you have $50,000 of working capital in your bank, and your taxes are $40,000, and you get a bunch of money, don't use the money that comes. Be sure to tell the bank you're only using the older money. That wasn't the PPP money. That they were using that money to pay for. I mean, come on. How do you? In the end, it all comes in one account. But I see the point. We got to make sure we follow the rules. We're always honest. So there you go. Anything you want to add to that, guys?
No.
No, and again, like any loan, I'm sure you'll be asked to make certifications along these lines. But yeah, it's if you have other money, there's ways to still get it done.
We have another person who is looking at the PPP loan, and they had someone quit shortly before the COVID crisis kind of hit. And so they are wondering if they can hire on their spouse as an employee to even out the employee count. Does it have to be the same person from before the crisis, or just the same number of people?
We understand it to be just the same number. So that should work.
Yeah.
And I believe there's also some kind of guidelines around making sure that the spouse, when hired, is paid in a somewhat similar pay scale to the person who left. Is that correct?
I don't know.
Well, I mean, yes, because your total payroll costs cannot decrease less than 25%, or there's penalties for that. So it needs to be somewhat similar as well as to what that person was being paid.
But I can't imagine that the government could say, hey, wait a minute, you're overpaying this employee. I know she's related to you, or he.
No, you could.
So it's really, I know one thing I remember my CPA used to always tell me for years, the IRS can't tell you how to run your business. Like, they can't tell you if you're making bonehead decisions and not to make them. They just want their money. So we might get some more guidance. They might have some loopholes. That sounds like a good strategy to maintain your employee count, and you pay them as long as it's legitimate, and you do that. I can't imagine you'd be in trouble. But Taylor, Brian, any comments you want to add to that?
Well, yeah, no, I think you've stated it. I mean, at this point, I don't think any of us have read anything that dives into those kind of details about the forgiveness process, right? Who exactly did you hire, and are you related, and so forth. And so until the SBA does, then we just have the general rules that are in the CARES Act, and they don't go into that much detail.
Right.
No, I.
Go ahead, Brian.
Sorry, I was just gonna say I determined I probably would have to use that strategy myself if I needed to have my wife or my daughter, who actually has been on and off with me working. I'd probably just plug her in if I needed to, and I would have her work, of course. I wouldn't be dishonest about it, but that's something a strategy you can use.
Yeah, good point.
But Warren's right. The act doesn't specify the specific, who the employees are. It's full-time employee equivalent average, per month.
It's per month. That's what's critical. It's per month. So you just can't have them all laid off, and the very last June 30th, you bring them all in and give them a huge bonus and say, here you guys go. It's ready to go, because they look at it each month and determine how much you're going to be forgiven based on the month. But that guidance could change, just like the independent contractor guidance changed.
Right.
But as it is right now, that's your understanding. They look at it a month at a time. How many employees do you have at the end of each month? And what's your total wages you spent out in payroll for that month? And it's got to match to determine how much you're going to be forgiven. But you can give bonuses to people. I think what I'm going to do is, we're still open. We have a skeleton crew, and everyone's furloughed for the most part, but we bring them back on so they have unemployment, and then we can do emergencies. It's working really, really well, where we can follow the law and be doctors and really take care of people and take care of the patients that want us and need us. So we get a lot of patients that come from other doctor offices that say, hey, thank you for being open. I got a tooth that hurts and I can't get a hold of my doc. Thank you so much. And they're going to remember that. They're going to know who the real doctors were that were willing to help them in the time where people really needed it. I believe so strongly about that. We're not breaking any laws. We're doing emergency, and in states where you can do urgent care, that's different. And the AD has some guidance on that. We're going to do another webinar about that. But so the point is that you bring them in, and Warren, you mentioned that to get some people off unemployment, you might want to give them a big bonus just to come in, and that can all be part of the forgivable wages that you do.
Right, because there are people, like they mentioned in this question, that are making more. In fact, you are making equivalent in the state of Idaho to about $22 an hour on unemployment, and my assistants are not making that as their normal hourly wage. So they're making more on unemployment. They're not going to be excited to come back to work, except for the fact that they need to come back to work or their job would be replaced by somebody else. But they need to come back to work, and then I might do something, because this is forgivable amount of money that we pay on wages. We might have a weekly bonus, let's get everything back rolling and build momentum. What can we do as an office to get people in and get the momentum going like it was before this happened? And so I think installing some kind of bonus system too that they'd be excited about is great. Yeah, that's what I'm looking forward to.
Okay, let's take one more.
All right, we got a lot of questions about part-time employees versus full-time employees when you're calculating your payroll costs.
Okay, without a doubt, the SBA makes it very clear. It doesn't matter if they're full or part-time, they count as an employee. So you throw them all in there. When asked for the number of employees you have, you need to include anyone that worked any hours at all as one of your employees. That's what it is.
Correct.
Yeah, it's about payroll costs. So whoever's included in there can count.
Yeah, great.
Okay. All right, let's take it. And we'll have some more Q&A in a minute when we talk about our experience of applying for the PPP. Okay, how do you apply for the PPP? Brian, you just got approved by not your first bank you went to. You just got approved today, right?
That's right. So I applied through Chase last week, and I was first in line when Chase opened their doors last Friday before last, and it was a mess. All week I waited for them to get back to me. Once I got back to them, their system kept crashing. So you're right. On Thursday of last week, I said, forget it. I'm going a different direction. And had remembered that I had about $10 in a small credit union bank here locally. So I went to that bank, and they had a poster on the door that said, "No, we're not open, but call this number." And I called them, and they said, "Hey, well, you can fill it out online." And I went to their online, and it went so much easier, so much quicker. They had a little PDF. It looked just like the SBA loan. And I just got an email this morning. It took 2 days, and I'm approved, and I've already got the loan. And so I guess the moral of my story is go smaller with the banks on that.
Yeah.
Go small or go home. Is that what you're saying?
That's right. Go small or go home.
I love it. Well, that was my experience too. Let me talk about mine. So I really like these guys, but Zions Bank had their own system. They're a local bank here in the West, and a bigger bank. One of the banks were too big to fail during the TARP thing, and they built their own online portal system instead of just letting you fill out the application that the SBA released for the 7A PPP, and it asked for a bunch of different stuff. And so they didn't have it live on Friday, and then on Sunday they said they had something kind of live, and then I logged in, and then they said it was down, and then they had something live on Wednesday, and so I missed a whole week, and then they were talking about the whole time independent contractors would be included, and then they switched it on Wednesday after the guidance came out, and they still just have an online form, and it taken me a long time to fill it out. I had to look up like my industry number and things that the bank was supposed to look up, but they wanted me to look it up. I had to give them a copy of my articles of incorporation. I had to give them a bunch of stuff, P&L, things that the other small bank didn't ask for. But maybe it's to Warren's point, that the fact that some of these small banks have never been SBA lenders before, and the SBA is opening it up and letting anyone do it. And banks that have been SBA lenders have systems in place, and they've done this a lot. And so they're making their own custom apps like Chase did. I'm not disparaging these banks. They're wonderful banks. If there's a run on a bank, your banks that have been bailed out by TARP are probably going to be okay. So the smaller banks probably won't be. Who knows? Hopefully there isn't a run on the banks. But that was my experience.
My experience was, I almost started to think that some of these big banks don't want to give the loans. It's been that difficult. We read in the articles, I don't know where they stand now, but Wells Fargo said they're not even going to do them anymore. So I don't know what they're doing.
Back up. They got limited to 10 million because of some of the things that are being
did they? 10 billion. And that's why they just used it all up as of last week.
But then it's been waived. They're able to go back in, but I think they have their own online portal. I haven't checked those guys, but I know like Chase had its own online portal too. So that's part of the problem.
Yeah, and to your point, James, with Chase, I was asked how exactly I was going to use the money, and they wanted itemized, and they wanted a whole bunch of different things that I did not see in my other application.
Yeah, it's not on the form.
Right.
We're going to show a copy of the form if you haven't filled it out yet. It's not on the form. So those of you that haven't yet applied, well, this is relevant to you. And those of you that have applied and are still waiting for the money, we recommend, this is still relevant for you too. Go down and apply again. Maybe I'm going to be in trouble. I don't know. I just wanted to get that SBA loan number. And I applied 3 times, and I finally got from a small bank up in Idaho. Here's an example of one of the small banks you went to. This is in Idaho. When you walk up, it's all closed by COVID-19. You got to call, like what Brian just said. They have, 1 teller, 2 tellers. You can see it's not, they got the teamwork sign up, and they're all wearing jeans, and we do the Corona bump, and here's the pay. Now at this point they were saying, yeah, we will cover independent contractors. When was this? Was this Tuesday, Warren?
That was Tuesday. Yeah.
We will cover.
They said no problem. Yep.
No problem at all. And so we were so excited. That's why we drove up there, and the only form they wanted was the same form that we gave them, plus all of our 1099s. Warren, you got that email on Sunday, didn't you? It asked about bring the 1099s or something.
Yeah. And I even called this branch on the way up as we were driving and said, I just want to make sure the 1099s are included in our payroll costs for these, and they said, sure, they are.
So we they gave us free little water bottles, and we're super happy to join in their bank and being a part of their bank, and thumbs up. This is it. This is the application they had us fill out, the same one you can download, nothing else, no other online portals. That's what we recommend is the way to go to get to the front of the line as fast as you can. I mean, Brian, you just applied yesterday with your small credit union, right?
Yeah, I was actually on Friday, but yeah, just over the weekend.
I mean Friday, yeah. You applied on Friday, and so not even one business day later, you got it from the SBA, the DocuSign saying you're approved. You got a number and everything.
That's correct. Got it this morning, actually.
It's a really big deal. So the one thing they will ask you for, even the small banks, a copy of your W-3 form or all the 941 forms. And every bank is going to be a little bit different. I went to a small bank, another small bank that I was trying to apply for here locally where we are, and they wanted our P&L for the last year for all of my companies that I own, not just the one I was applying for. Like, where do they come up with this stuff? It's not on the form. I couldn't get it. So shop around. That's the moral of the story here. Make sure you have your W-3s, your 941s, last 4 quarters. They'll probably for sure want that. All the rest of the stuff is like extra. And our point number 2 here, Taylor, I think you mentioned something about this. Some banks will make it more complicated. Anybody want to comment on that on number 2?
You know, for those that are in that situation where they are an independent contractor or they have associates that are like James, you said, we just had to fill out the form, which takes 5 minutes, and give a 2019 tax return, and that was it. That was all the information they required, and they processed it. So
an independent contractor type person.
Yeah.
The one helpful information that I had with this was, and maybe I'm the only one that had this problem, but at least with Chase, they required a certain size on how big of a document you could put on there. It was 5 megabytes. The information I was getting from my accountant that sent it to me, they were bigger than that. So I had to actually have them compressed and have them all fixed before I could even upload them to Chase. So just make sure that they're in the proper forms. And
I think the moral of the story, what we're saying here is try to find a bank that'll let you come into their bank and hand the PPP form that you've already filled out from the online SBA website. That's the kind of bank you want to go to, not one that requires, or they give you a link and you can upload that, but not a bank that requires you to use their own online thing that they built that has a bunch of extra questions with the hope that they'll fill out the form for you and then send it back and have you sign it later. It just delays the process because these funds are running out. And maybe you're a little more cavalier about it and you think that Congress will get together and that they'll actually increase the funds. I hope they will. I hope they will. And if you delay and you're able to get it in May, then great. You are farther ahead because you have 8 weeks delayed starting when you get the money in May, and your dental office isn't open until then in some states like in Utah and other places. But a bird in the hand is better than 2 in a bush. We're sticking to it. That's our story. We're sticking to it.
That's
and
right.
there are good brokers out there, but we're finding, like, even groups like Lendio.com, they seem to be overloaded, and they're struggling to keep up as well.
Yeah, what they said, they sent out a letter to all of their people saying, if you've applied with us online, wonderful, go apply to your local bank as well, because it's first come first serve on this. I couldn't believe it. An online broker is saying, go apply to a bank too, because we might not get to you in time. All right, Sarah, let's do another poll.
All right, we've got one more poll here. This one, we're curious to find out if you've applied for and been approved for a 7A PPP loan, what kind of lender did you use? Now, you'll see on this poll, you can only select one option, but we did put some of the major banks on here, as well as an option for some other big bank, regional or local, a local credit union, an online lender, or other. So we've got, the 87, we had 100 people who have now voted. We've got one who's kind of a winner right now. It's interesting. And I've seen also in the comments here, a lot of people saying that Wells Fargo has been kind of a nightmare to deal with. So we're seeing not a lot of people who have been approved for their PPP loan through Wells Fargo. It sounds like it could be a part of the reason why there.
I'm interested to see if I was the only one that had a poor experience with Chase, but it might be me.
Yeah, we're going to leave this for about 5 more seconds here.
It's good. Okay, so about 200 of us that are on have actually got money, been approved and have got the money, and most of them have done. It's good. It's been our experience too. Most of them have been a small regional bank of some kind, or a local credit union. I think we could lump those two together, regional bank or credit union that's smaller. 7% from Chase. Bank of America, I know they were really had their act together, and they started loaning it out. And on Friday, they were the only big bank that actually were giving out and approving funds last Friday, Bank of America. Wells Fargo, Citigroup, some other big bank, but the regional or local banks seem to have it together. It's just easier to do it. Online lender works too. Okay, cool, great.
Awesome.
Hopefully you find that helpful from your peers. All right, we'll do a quick update on the Family First Act and how it affects dental offices. Taylor, would you mind giving us some new insight that we've received?
Just, you know, you bet. Similar to how the SBA continues to update how the PPP loan works, for example, the Department of Labor, they've got a fact page as well where they're using that to provide updates in more detail, and they're authorized you know, to obviously implement the Families First Act or components of it. So just a couple of quick points for you. Again, if in your dental practice an employee requests the new special leave under this act, two things you know, to remember. Verify if that employee is currently laid off or furloughed. If they are, then they're not currently entitled to that paid sick leave. Okay, so it doesn't apply to them if that's their status. But if they are an active employee and there are some small business exemptions that could apply to you. And our point is, make sure you understand those. We've summarized a couple of them here. The details are listed on the Department of Labor's website. But for example, from what the Department of Labor is currently saying, and this could change, if an officer of the company can certify one of these three things, then in some types of this new paid leave may not apply to you. If you literally can't pay for it, you'll have to shut down completely. For example, substantial risk to your business because of special knowledge or skills, and you see the other example. Again, these are summaries. Our point to you is be aware that you may be exempted if you have fewer than 50 employees, and understand and document that exemption in case there's ever a question down the road why you didn't provide the leave.
That applies to most of us. Thanks, Taylor. The bottom line is you've got to decide if you're going to lay off your staff or furlough your staff. And we did a poll last Monday, and about 20% of the doctors that were on had already laid off their staff. We went back and forth on what we were going to do. And Warren was going to lay off staff, and Brian and I were going to furlough. We all decided to furlough our staff instead of laying them off. Why did you decide to furlough your staff, Warren? And help me understand what this slide's talking about with cash flow.
Mainly just because of that fact that Taylor just mentioned, is that I thought I might be protecting myself from employees that say, no, I can't come back to work because I think I might have COVID and I'm going to go get it tested. So I need you to pay me for 2 full weeks of pay while I try to determine this. If they're furloughed, they can't exercise that right either.
It's a big FedEx on that.
Yeah, and like you said, I didn't want to go through all the process of rehiring everybody. That was another downside. And I do want some staff available for emergencies. So it just made more sense.
Made more sense for us too. Brian, why did you decide to do it? And how are you using your furloughed staff now to stay open?
Yeah, that was the big thing with the furlough. Well, there was 2 reasons. One, I wanted my employees to know that I was hoping that they would come back, and we were planning on reopening, and that was the big driving force of that, so that they could put a date on when they were coming back. But it's been nice because I have been able to continue to use them sporadically as we've been able to see some emergencies. So strategically, we can still bring them in because they're still technically an employee. And with the CARE Act, they have allowed us to do that more so than they did in the past. Let us have a reduced hours, but yet they are still collecting unemployment.
Well, me too. I think it's just easier to run your crew. And I was talking to one of our great doctors, Dr. Jenkins out of Maryland. One of our clients, been with us for 10 years. She actually is doing teledentistry with emergencies, getting a photograph of their tooth, prescribing antibiotic without having them go into the office like we normally do. And then just filling up her schedule Mondays, Wednesdays, and Fridays with sedation too, with emergencies. And she says, I'm making more money now almost than I was before because of my expenses are cut down so much. So there's a way for us to really manage this intelligently. Our point is, if you have your office closed, open it back up for emergencies. And we're going to do a webinar on this. We'll talk about it in a moment. But of course, you want to make sure you're working your accounts receivables. That's what eAssist does. We do it the best. We can do it for you. You know, we're getting new customers every day, even during this crisis. making sure that your receivables are coming in. But be open, do the teledentistry part, making sure that you don't have to jump into an office. You can fill your schedule up real fast with emergencies. And there's been some HIPAA rules that have been relaxed, and we'll talk about that on next webinar.
James, real quick, just a couple of final points, legal points on the furlough. If that's what you decide to do, it is recommended that you provide, even if it's an email, something in writing so that it's very clear that that's what you're doing. The employees may need that actually for unemployment benefits as well. And then two, just be aware that if you're furloughing them, health and benefits and so forth continue, those don't terminate. And so again, if you've got questions about what you may need to do in that circumstance, check with your administrator, your provider.
Okay. Our next webinar is April 23rd. That's the link, dentalbilling.com cash flow webinar. We hope that you join us, and we will talk about our strategies of how we've been able to run our dental practices successfully during this time, legally and ethically, being real doctors, helping people in need, following the rules. What we hope you've learned from this is a better understanding of the current SBA loan guidelines, your best options and where to apply for the PPP loans for a quick turnaround, any better understanding now of the new current guidance that has been offered on these loans by the SBA, and also an idea how to craft a plan going forward so that you can keep cash flow coming in. What we invite you to do today, create an action plan. If you don't already have one, create a plan, gather your documents to apply for the PPP, contact your small bank or credit union, and then join our next webinar so that we can talk about how to successfully run right now during this crisis. Okay. Any other comments, team?
We do have a couple more questions. Do you want to take a few more?
Yeah, let's do Q&A for as long as we need.
Perfect. All right. We've got a question here from John. He said, thank you guys for all you are doing. These webinars have been fabulous. My partner and I are PLLC. No W-2 income, just a draw. Mention was made of using some of the 25% non-payroll portion of PPP that could be used for income for them. But aren't the dollars specified for rent, utilities, and a short list of other things? How do we get that money out for ourselves? We can't get unemployment or payroll assistance at all. Do we have time, or do we have to change our structure to get ourselves into payroll income?
It's a good question. So professional corporation, a professional limited liability corporation, it sounds like that's how you're organized. And it's the IRS sends me those letters all the time saying, hey, we think you're a professional corporation. I always say, no, I'm not. I don't want to be. I'm not saying that, but you can't get out of it once you are. So I'm not answering your question directly yet, but I am helping others. There's the only disadvantage you have, or the advantage of being a PLLC, is that you can put professional corporation on your sign, but it's really just the way you're organized. Your entity's organized, and you're always going to be taxed at whatever the corporate tax rate is, and you can't really go below that. That's to the IRS's best incentive to do that. So I haven't done it on purpose, and that's the advice I received from my CPA, but it is what it is. Now, you are already a professional limited liability corporation, so you've got to you're paying yourself as really a dividend. Call it a draw, call it a dividend. And I think what the guidance that Warren was suggesting is that you can start paying yourself as a W-2 for these 2 months. You add yourself in, you pay yourself at the max for the next 2 months. You don't take a draw. You are paying payroll tax on that. Mm-hmm. So there is an additional 15% expense that you have. You got to do the math to see if it's worth it. I think probably is, just what my gut math tells me from my back of the envelope here, just chatting with you. But that's the only way to do it. Warren, you want to add anything to that?
Yeah, I was just going to say, if you're not going to go that route, you're basically going to have to use funds that you have set aside to pay for rent, to pay for utilities and some of those other justifiable expenses, and use those funds to pay yourself your dividends, and use these funds to pay for rent and those qualifying expenses in that 25%. I think that's kind of what he was alluding to in that question. But another way around that is to talk to your CPA and say, can I get on the payroll for the next 2 months, like you mentioned, James, and get yourself part of the payroll.
Because again, the list of things, expenses that you can be forgiven for is fairly short. And then 75% of that needs to be payroll, right? It's payroll, interest on a mortgage obligation that's covered, rent obligations, and utility payments. That's right. The list of forgivable costs or expenses during that 8-week period.
Yeah, and I think I mentioned that add yourself to the W-2. You can go above 75%. And that's why you start taking from the 25%. So you can your payroll can be bigger than 75%. It just has to be at least that. So you can add yourself, and all that does is it just pushes into that 25%. And now your payroll may be 85% or 90%. That just leaves you now with only 10% of that loan that you originally got to use for the other stuff.
Right. Going back to one other strategy that we didn't really get to cover in the slides, but Brian, you and I have kind of talked about this, is when you get these funds early, like ours are approved right now, and yet my full staff, my hygienists aren't working, my full staff's not back. I'd rather, delay using my 8-week period, but now I can't, is one possibility that we don't know whether the SBA will say it works or if that's a loophole and it's disqualified, is to prepay our staff. So if my 8 weeks ends 6 weeks into my staff being back full time, I'm going to try to maybe prepay a couple of weeks ahead my staff and say, here's what you would earn in the next 2 weeks on average. I'm going to give it to you now. So it's in this 8-week time period. And Brian, I think you mentioned a different strategy is, go ahead. You wanted to.
Yeah, and I like that strategy. Hopefully we get some guidance on that and that works. But the other one is that I had mentioned was, well, we're just going to work more during those time that we can be open. So if I got my loan today and I can't open till May 1st, well, we may do extended hours in May to try to capture that work and that payroll during the month or during that May that we're open.
Yeah, and I think we also talked about maybe the possibility of prepaying rent. Can you do that? Can you not do it? I don't know, but that 25% might be bigger than what you normally have for those costs. Maybe you could prepay some rent and get it to count. I'm not sure either.
You're a landlord. Would you accept a prepayment of rent?
Yeah, so I am my own landlord.
I would too. I would too. So those are great questions. I hope you answered them.
Yeah, and this is a good example of us within the current guidelines trying to figure out how to make this work best for dental practices. And as Warren has said, we anticipate additional detail. I mean, the only prepayment restriction I see in the law as I'm looking at it for forgiveness of loans, it specifically says you cannot include prepayment of principal on a covered mortgage. So again, but other than that, again, there's not necessarily a whole lot of other detail. It just talks about payroll costs and covered utilities and things like that. So,
well, if they keep it the way it is right now, just like the old independent contractor, if they keep it the way it is right now, everything we just said will work.
That's
right. So you don't even have to pay yourself to get that extra. You just prepay your staff for the next 3 months, and you have the whole thing forgiven, and all the extra revenue you get is just like it's like you have a college football team. You have to pay the players. The government's paying the players. You go out, you just pay the coach.
And if the government's slow enough, you get your loan, you get forgiveness, and you move on in your life, right?
We do the right thing. Okay.
What other questions do you have, Sarah?
We have some questions here about what you can include when calculating your payroll costs, as well as what's included in your forgiveness when you count payroll, specifically different types of insurance, health insurance, disability insurance, 401k, life insurance. So it seems like there's questions about what all you can include when calculating your total PPP loan, as well as what's included in your forgiveness.
Taylor, can you do a little bit of research on that if you don't have it handy on the top of your tongue?
I've got it right here. So it's the same definition, payroll costs, and that's why this term is so important under the law, and that's why many were confused when the SBA came out and started to kind of cut up the definition, because it really doesn't flow that way. But we have to do what the SBA is going to do at this point. So payroll costs. If we're talking employees, sum of payments of any compensation with respect to employees, and includes this: salary, wage, commission, similar compensation, payment of cash tip or equivalent, payment for vacation, parental, family, medical, or sick leave. But I don't think that includes the new sick leave under the Families First Act, just other sick leave. Allowance for dismissal or separation, payment required for provisions of group health care benefits, including insurance premiums, payment of any retirement benefit, and payment of state or local taxes assessed on the compensation of employees.
On our PPP calculator, dentalbilling.com/estimator, We included all those details, specifically what you could do. So it sounds like what you read there, Taylor, is very, very clear. Disability insurance doesn't count.
Yeah, it talks about group health care benefits
Yep.
and then retirement benefits.
This is a payroll protection act, not necessarily protect the owner protection act. This is your payroll that you have, your payroll expenses that you have to stay operating to keep you from firing your staff so that you have enough working capital to pay your staff, pay your healthcare benefits, pay your whatever other benefits you got to your staff, your retirement benefit that you have, whatever plan. That those things will all be, you can incorporate that. And that those are all things we've included in our payroll calculator, estimator. Oh, that's a great question. Okay. I hope we answered it.
Another question we've had a couple times here is there any way to check on the status of your EIDL loan or the 10K grant?
You're supposedly supposed to be able to email them and ask that way, but I emailed them a while back. I haven't seen anything.
Yeah, I emailed them too. These guys are like, they're so unresponsive on their email. I don't get it.
If you've got 2 to 3 hours to blow, you can stay on the line, and then I think you get more information if you talk with someone and give them your app number then.
Yeah, I know someone that started at 8 o'clock and got a hold of somebody at 10:30. So there you go. You got to have 2.5 hours.
We're recommending you hire one of your kids, put him or her on the payroll, have her be on hold all day long to talk to the SBA to get on the. Not really. We're not recommending that, but that's one way to go. We have seen success with some of our eAssisters who have actually called the SBA, been on hold for 3 hours, 4 hours, and got information from them that way. Okay.
Another EIDL related question, are the EIDL grant and EIDL loan 2 separate applications?
No, it's the same application. You just mark a different box. Depends on whether or not when you applied for the EIDL loan. If you applied before Saturday, March 28th, I think, it didn't have it in the box. It was a piece of paper. It wasn't an online form. And you have to apply again if you filled out the EIDL form without the 10K advance box. You got to go back online, dentalbilling.com. We have the link to the SBA where you can apply for that, or go to the SBA and hunt it down and find it that way. And you just have to apply again and click the box that you want the 10K advance. So if you haven't done it yet, if you didn't do it before they updated their application, then you just apply one time. If you did it before they updated it, you got to apply twice using the same form, the new form online that has the 10K grant spot box.
And what can we tell everyone about EIDL forgiveness?
EIDL forgiveness. Warren, do you want to take this one?
Did you say Borg or Willis? I'm sorry, I didn't hear you.
Warren, take it.
Okay, yeah. So basically, if you apply for the EIDL loan, the true EIDL loan is not a forgivable loan. So you're going to be asking for working capital maybe for several months, and it's going to be on a interest rate that we believe will be 4% over 30 years. However, if you get the $10,000 advance, you can take that advance grant and deny the EIDL loan if it's for the same exact purpose, and you can roll the $10,000 into your PPP loan. So basically, it just gives you, it doesn't increase your forgiveness amount any, but it can be part of that loan. So in essence, your maximum loan amount could be $10,000 more with that.
And there is a box on your PPP form that says, do you want to roll in your EIDL 10K advance into this loan? Because I haven't received mine, I said, no, right. I don't want to roll it in. I haven't gotten anything.
Right. Yep.
So Brian, anything you want to add to that, Brian?
He's on mute.
He's probably got a patient in the chair he's got to get to.
I'm getting close to that.
Yeah. Wash your hands. Make sure you wash up before you get in there.
20 seconds. Got to count the happy birthday twice.
That's ABCs. All right.
We have another question about the EIDL. Somebody asking about if the max loan is now 15K.
You know, I've seen things saying that, and the only idea that I have about that is that I don't think the EIDL loan department has enough money for all the businesses that are applying for it right now. They would need more funding from the government to increase that. So I don't know if they're restricting the entire loan down to 15,000. It seems odd that they would do that, but it's a possibility.
As soon as we see it on the SBA website, then I would trust it. If I see it on a blog or a chat room or someone else suggesting that that's what they've been told, I'm not sure I believe that yet until I actually see some more. They can change whatever they want. They have been. They've obviously shown it. Right, Taylor? Anything you want to add to that?
Yeah, no, they April 7th, April 8th, April 10th, they continue to update kind of their fact sheet. And I know Warren's looked at that too. I don't recall seeing anything on that fact sheet. And that's where I anticipate about, you know, officially reducing the maximum amount of these loans. And I think that's where we'd start to see that, because they continually add questions and answers to that sheet.
Yeah.
I got a hard stop here. I got another appointment, but let's do one more question, maybe two at the most. Find one that a lot of people are asking, Sarah.
All right. No pressure or anything. Just got to find like
No
the
pressure.
one biggest, best one. We do have a lot of people asking specifically about the 8-week time frame. One, when does the PP loan get funded? Is that when the 8 weeks starts? And what if we're still closed down in dentistry at that time? What's your best advice on what to do with your team?
And we've covered that a little bit here. We can cover it again. Warren, would you mind covering that again?
Sure.
Not only advice, but
Yeah, you bet. So your 8 weeks is good. According to the definition in the CARES Act, your 8 weeks starts the day of your loan origination date. So basically, I guess you could think of it as the day that you're funded, but the day that you sign your document saying, okay, here's my loan documents, they're signed, whether that's DocuSign or you're signing in person, that's your loan origination date, and your 8-week period is going to start at that point.
Now,
So,
Warren, just really quickly, there has been in one of those updates the past couple of days, the SBA has said that 8-week period will start once you receive your first distribution of loan proceeds.
okay.
So they've clarified that, and then lenders are supposed to give you loan proceeds within 10 days of application approval. That's what they've told us.
okay,
Right.
I love this. All right, we're going to strategize here in real time. So one of my banks that I went to said it took them 7 weeks or 7 days to actually take their application that people gave them on Friday, and they didn't even start putting it into the SBA system until the following Friday. They're really, really slow. I gave them all my stuff. I haven't got any word. The other credit union said, hey, today I'm all approved. So of course, those are the guys I'm going to go with on the thing, on the loan. But if that's the guidance, Taylor, and it's clear as clear could be that as soon as you make your distribution and you take it out, banks are supposed to give it to you in 10 days.
Yeah.
My strategy is going to be, I'm going to have the guy who told me I'm approved hold on to that check and not wire it in until I say wire it in. And what is he going to do? Get dinged at day 10? He might. I mean, they're really slow on stuff. So maybe for sure I'm going to push it out 10 days. And if I can push it out even longer by not signing the DocuSign for a few days, by telling them, look, I don't want it. Don't give it to me yet. I don't want it. I don't want it. I'm not open yet. And if I can buy some more time that way, the loan forgiveness starts the moment you get it. At least I know I got the bird in the hand.
Yeah.
And then I'm pushing it out as much as I can, knowing that as soon as I get the check wired into my account, or if it is in my account, been deposited by the bank that I bank at, because that's really how it goes. If you go find a bank that you don't bank at, they're going to ask you how you want the funds. The funds are sitting right here at our bank. How do you want them? And it doesn't start until you get them. So in my scenario, it's going to be, well, they're going to make some new accounts for me, and I'm going to want them to put them in those accounts as soon as I tell them to do it, but not until I tell them to do it.
Because
My only concern, Taylor, I didn't mean to cut you off. My only concern is that the lender is being told by the SBA that you must disperse those funds within 10 days or the loan is not approved anymore. And so if they're worried that they're going to say, okay, that's no longer a backed loan because you didn't disperse those funds within 10 days, that would be a little bit of concern. You'd want to clarify that.
yeah, that potentially could be a problem, but James, I agree with you. I mean, to your point, I think especially for dental offices where you're extremely limited in what you can do right now, and in some cases maybe completely limited in some states. This is a conversation you have with your banker, right? However they need to do it, whether they're putting you in the queue for a quick approval once you give the green light, even though you've already been pre-approved, right? Or whether they're working with you on how quickly they're going to get you those funds. I absolutely think that's something that you work out with your lender. I mean, I hope the ADA and others are lobbying hard with the SBA right now to make this easier for businesses like dentists who have been, shut down. Because again, not everybody's in that boat, but dentists are. And so this is an issue for them.
for us.
Yeah, yeah.
So I guess the bottom line is we really don't know. I'm going to talk to your lender and say, this is the scenario. I don't want it until the very last moment where it's no longer there anymore. And if they can't buy any time, then you got to get it as soon as the lender says, okay, I had to give it to you, otherwise I would have lost it. That's how I'm going to approach it. And then I'm not going to pay my staff until I open. And then when I open, because I don't think I'm going to be gone for the next month, I'll be sure within that month pay them something. But when I bring them in, I'm going to prepay them all for the next month if I can. And then the following month, prepay them for the next month to kind of get caught up on that so that I'm still following the rules based on how we understand the rules right now. Those may change, but that's my current strategy. Warren, what are you going to do?
Same thing. I'm just going to, as soon as my entire staff, I have some staff working now, and my office manager, one assistant working basically full-time right now. But I'd rather wait 2 weeks when I believe May 1st, we're going to be completely full-time with all of our staff working. I'd rather start the payroll expense being evaluated then. But, for the very tail end of that, I may have to prepay my staff for two weeks ahead and say you're going to get your 2 weeks, your paycheck that would normally be in 2 weeks. I'm going to give it to you now. And so when they do the average over the last 2 months, it'll be included in that 8-week forgiveness.
It's a good strategy if it works. If we don't get guidance against it, right now we don't have any guidance against that as far as we're aware of. So,
right.
Okay, let's do one more, and then we got to stop.
All right, we've got questions about the EIDL loan here. They're wondering what limitations there are on what the loan can be used for, specifically a question here about whether or not you can refinance your real estate loans using the EIDL loan.
It's a good question. I know the 10K advance, you cannot. It's supposed to be used for payroll only, the 10K advance. But EIDL loans are new. Their EIDL loans have been around a long time, and they're designed to help someone in a hurricane or a flood, help a small business owner fix whatever they need to fix and use it for certain things. I don't think you can use it to buy more real estate. That's what the SBA Express loan says. But Taylor, would you mind double checking on that? We can give you a real answer here in just a moment. We'll actually take it right from the bill and the guidance that we have so far.
Yeah, let me take a look.
My thought is to kind of give you another strategy with that is if you have $80,000 of operating costs per month running your practice, you could say, you know what, I need 6 months of operating costs to run my practice because I think it's going to be devastating for us after we try to open. People aren't going to be coming back. I'd like you to loan that amount to me. Now I can use those funds to pay my operating costs, and then the money that I don't use, the practice generates, I can use to refinance as funds to pay off a loan or something like that. So you can kind of divert them that way to use it for a different purpose.
But otherwise, the use of proceeds for an EIDL are to pay things like fixed debts, payroll, accounts payable, mortgage or rent, other overhead expenses or bills that can't be paid because of the disaster's impact.
Oh, that's huge. Other overhead.
Yeah, that's what I'm talking about.
Anything.
Well, and again, that's a summary, right? Again, your banker can tell you, but that's where it lands. It's meant to help you because of the disaster.
Well, guys, I appreciate it. Thanks.
That's great.
We hopefully you found this helpful. I'm looking forward to having you join our next webinar about how to keep your practices humming right now during this time. And we appreciate all that you're doing for patients out there and for our industry, practice of dentistry.
Yes. Thank you.
Thanks, everyone.